If you want quick money, it ain't coming quick. You've got to work at it. It's very hard to get that concept across because you either have it or you don't.
Welcome back everyone. Today I'm sitting down with Gary Langley from the Scruffy Trader. We'll talk about his progression as a funded trader for the 5ers, what he had to went through. If I'm not mistaken, you are managing now $200,000 with the 5%ers. We can discuss like your story, how you went through this. But tell me first like a bit more about who you are and some background about yourself.
Well, background-wise, when it comes to trading, it is an odd sort of tale because I never wanted to be a trader. It never even crossed my mind. I fell into trading through a business meeting of a company that I used to have. I used to have a mail order company. And when you're very small, you deal with a wholesaler and sort of buy a little bit. Then you get a bit bigger, you deal with a primary wholesaler, so you buy some more. But eventually you come to a distributor. And distributors are the importers for the product. Now, me being me, sort of as you're getting bigger and I'm buying lots of product, I was trying to get the price down. And I was in this meeting and the guy said, no, you can't have the price down. The exchange rate is terrible. And I'm thinking, well, I want to buy a container of goods. What's that got to do with anything? And he started explaining to me that they buy in Japan using US dollars. And if the pound isn't good against the US dollar, you can't get a better discount. Well, this fired something in my mind because the chap that I was with who worked for me was an ex-commercial bank manager. And he started talking about forward purchasing. And I hadn't a clue what these two were having to talk about. And on the way home, he explained it to me. And that kind of started my passion for trading, if you like. So for me as a person, it came from a business background. Here I am now. I'm 52-year-old. The company closed 5 years ago. And I essentially needed a job. And trading was part of my job in that company. You know, I'll go through it a bit if you want. And I progressed through, but I just stuck with it. And little by little, here we are. To me, it's just a job. That's all trading is. So that's me in a nutshell. I'm just a working guy, not special. Just turn up every day, very disciplined in what I do. And I go through it step by step as if I was running the company like what I used to do. Simple stuff. So, and over the years, it's become sort of the Scruffy Trader, which was a hobby. It still is a hobby for me on YouTube. And everyone thinks it's because my charts are mental. It's not. It's just that I'm a natural born scruff. I leave stuff everywhere. And my wife calls me Scruffy all the time, and it kind of stuck. But when it comes to the job, on point every time. Simple all the time. Simple is best.
Interesting. Now the difference I'm sure is you were before trading for a company, like you were not in your own account. Now you are mostly on your own account, funded account for sure. But tell me about how did you first kind of learn trading? Did you get some training through that company, or was it you by yourself trying to learn how to trade? What did that look like?
It was kind of both. As I've just alluded to, Jim, who worked for me, was a retired bank manager. And when he was explaining forward purchasing, and that's basically, if you've not come across it before, it's locking in an exchange rate for 3 to 6 months, or you can buy the physical dollars and sit on them in a wallet. He started showing me how the charts worked in the office. And because as we grew, we transcended from the distributor and going straight to source and buying directly from the manufacturer. So we'll be buying 3 or 4 containers of goods at a time. So we'd have to plan out an entire financial year to pay for this. And if you got your budgeting correct, in other words, looking at the day chart and you're thinking, right, well, we're going to buy the US dollar when it gets to X point, it helped us. Now, that's where my sort of starting in trading came, because then I started getting fascinated with the charts. And it was all day charts. Everything, it was anything more. It was day charts and levels. That's all it was. But I went through the process as pretty much most traders do when they are relatively new. I mean, I'm going back blimey, this is early 2000s, so it's a long time I've been doing this. Okay, well, if I'm dealing on the day chart and I'm having to wait maybe it's a month to get an order, if I'm on a 5-minute chart, I can make a fortune doing this. So I bought a few courses just off the shelf, as you do, and found they were a complete waste of time. If anything, they did more damage to my trading than helped it. So I had to strip everything out and start from scratch. And at the same time, I've got Jim in the office who knows exactly what he's doing, sitting on the other side, laughing at me. And I was saying, "You've just let me spend 500 quid on this course." He goes, "Yeah, I know." I go, "Why?" He says, "Because you had to learn how to fail before you can step forward. You had to make a mess of it." And from that, I started learning from the mistakes, just little by little. But I have, over the years, sort of bought and been on sort of proper trading seminars from banks, etc., and people who really do know what they're doing, and then just pieced it together slowly by piece to where we are today. So my journey's been thick end of 20 years to get to here. Yet when you look at it, you think, well, you make it look easy. Well, it might be now, but it certainly wasn't when I started. So I'm just the same as everybody else. I had the rough times. In fact, I needed the rough times to ensure that my mindset was put in the right place and I can be profitable today.
Yeah, definitely. Something I see a lot with traders who especially go from like institutions to then trading on their own. They don't have the same feeling, don't have the same responsibilities when they go on trade on their own. So I'm curious how that progression went. How did you move from trading for someone else then to trading for yourself? How did that turn out?
I've always sort of traded for myself because I was the managing director of the company. It was a mail order company. So I always made the final decision on it. But what happened was, as with most things, and if you understand the mail order industry, you'll know that Amazon, this little company, is grown into a big company. It's wiped out the mail order industry. Now, I had that business for 15 years, and it was quite high profile. It did incredibly well. But the Amazons and the eBays came in because we were into mail order before they were around, because they didn't come into existence till around 2008, 2009. Well, or I should say they didn't blow up till around that time. And they forced the price so far down that the business eventually had to close in 2017. Now, earlier in my youth, I had a bit of a bad accident. I broke my neck. So me working for somebody has to be behind the desk, so I can't really go do a lot because I have a bit of nerve damage in this hand. And I'm not one for resting on my laurels. So I thought to myself, when the company closed, what skill set have I got and how can I apply it? Well, because I'd been trading up until this point, both for the company and personally, I decided this is the way I'm going to go. And it was just simply a decision of, right, well, I'll interview myself. Did I get the job? Yeah. Off we trot. And that was it. It was just a conscious decision. This is what I'm going to do. I'm a good boss, but I'm a terrible employee because I like to do things my way. I knew I had to work for myself. And as I was saying at the start of this, trading to me is just a business. It's just a job. I'm not in it to get rich. I'm by no means rich. I earn a good wage out of it, and I'm happy with what I get. But I put a set amount of hours in, so I turn up at the desk every day at the same time. And when I'm finished at 5 o'clock, it's just like me clocking out of the job, and I'm done. And that's it. And when I've been paid within the day, I stop as well. So that's kind of how the transition came. It came, well, you can call it sort of the greatest gift from my worst nightmare, because when the company was forced to close, it was horrific. It was one of the worst things you could ever go through. But I'm happier now than I was then, because trading's given me the freedom to do what I want when I want. But I've still got to make it work to be paid. So that's kind of roughly the journey in a watered way, if you like.
So back when you went to trading on your own, did you have the capital already to trade for yourself, or did you have to look for capital from a prop firm or something to trade for?
Originally, I trade my own funds, and I always have. When I first started, I didn't have a lot of money, and I did do odd jobs to feed into the trading pot, and I was compounding at the same time. Now, when it comes to prop started for me about 2 years ago, and I had no desire to trade a prop firm, none whatsoever. And within sort of like the little YouTube channel that I got, there's a few people follow me, and I set up a little Discord group for them so they can talk amongst themselves. And it was brought up in that group, we want to try this 5% company. And I'm thinking to myself, well, who are they? What do they do? Because up until that point, I'd only ever focused on my own funds. Prop wasn't even in it for me. And when they were explaining it to me, all that was running through my head all the time was, why would you pay somebody to trade? If you've got some money in an account, trade your own money. That surely is the way forward. And when I looked around the industry, I found a lot of them to be, because the rules were, let's just say, too strict. And it's going to cost you more in fees than you're going to get in your profits. However, when I looked at the 5%, because the guy said, we really want to try this. I said, well, I can't talk about it unless I've done it. I like to speak from experience. So what I'll do for you, I'll contact them and I'll get the T's and C's, because, like I say, going back to my business days, I'm kind of a stickler for reading between the lines and things like that. I went through their T's and C's to see what they were about. And because the time limit was quite wide at the time when I started, you had 6 months to pass the challenge rather than sort of what a lot of them have is 30 days. And the targets were realistic. And I thought, okay, well, what I'll do for you guys is I'll trade it alongside you. And what I found when I was getting into it, I kind of changed my mind on the sort of prop industry, if you like, because suddenly I started thinking to myself, well, actually, if I turn it on its head and think about maths rather than the product, so you take a 50,000 account with a prop firm, for argument's sake, and it costs you 500 quid to buy into it, they'll give you instant funding. Well, the 5ers did it at the time, roughly, straight away. If you looked at the drawdown rather than the funding, that's the size of your account. And that's what I kind of told to the guys. And I thought, right, okay, so my £500 can actually buy me sort of a little bit more funding capital, if you like. And then once you pass your challenge and you get your full 50,000, it's 10% drawdown. That's £5,000 on sort of working capital, because I work on the drawdown rather than the balance. Because to me, the balance is just the leverage. That just opens up the position. So my 500 quid has actually bought me 5 grand. And it just seemed to be common sense. So I did that challenge and it was running very well. And then I said, oh, there's this one. And I ended up doing it 3 times just to show that it can be done. And at the moment, I'm doing the freestyle, and sort of over the 2 years, it's gone from, like, it started with 13 grand in funding. And as you're saying, over the last couple of years, I'm well in excess of 200k for them now, and it pays me pretty well every month. So happy days. Money for old rope, as they say.
That's a really good achievement. Now, what do you think are some of the keys, the differences that makes traders get funded? Because most people think they can just trade the same strategy and then get funded, and it could happen. But what are some things you got to think about before you get funded by a prop firm?
You can trade the same strategy, and I do. I've traded the same way for years. I haven't changed. I think the difference between your self-funding and prop funding is you as a person. Because if you're seeing, as I was saying there, £50,000 is your balance, you think you can trade using that. So you'll automatically increase your lot size or your bid size, thinking it's a £50,000 account. It's not. You have to look at the drawdown, the limitation of the account, and then size appropriate to the drawdown. That's the difference between looking at sort of your account, because if you've got 50,000 in your funding account, you do have 50,000 to play with. So you can put a bigger lot size on. So you've got to change your mindset on the numbers. And that is one of the pitfalls I've seen the guys fall into, because they certainly think, oh, I've got this massive account I can put 10, £20 a point on. But they haven't, because the drawdown is so small. If you're trading £25 a point on sort of a couple of thousand drawdown, it doesn't take long to wipe it out. And they don't understand. They're going, but I had a 25,000 account. No, you didn't. You had £2,500. So you should have been trading at less than a £5 a point, even down to a couple of quid. So it's up here. It's your mindset that's the difference rather than the strategy. When it comes to strategy and the way that I look at things, and this is for self-funding as well as prop funding, be very patient in your trades. I'll trade once, twice a day. That's it. But I can wait 8 hours for that one trade. And because I'm predominantly a day trader, but if I'm swing trading, I do have swing trades as well. I might wait days or even a week for the setup to come in. And with prop, inevitably what happens, especially on some of the other companies, the 5% is pretty good because you've got a long time period to pass your evaluation. Whereas I've seen some, you've got to do like 10% in 30 days. So you're almost forcing yourself to take a trade that isn't there. And it can breed the gambling aspect within you. It's not the strategy or the way you trade that's the problem. It's you. And calming down that inner demon to press the button just because you feel pressured to do it. It's kind of my take on prop against own funds anyway.
How would you say you can reduce or deal with pressure? Is it just a matter of kind of finding routines to not be pressured? Because I know for some people, like you mentioned, they do a challenge like a 100K account. So that seems big for them. It's a big number. They feel like they might lose it. But if they think about the risk, then it's a different thing, of course. It's going to be a much smaller number, so less pressure. But how do you deal with that pressure of prop firm not blowing up your account, not failing the challenge? How do you deal with that?
There's two aspects to pressure. You have your personal pressure, where you're either sort of quite a nervous person or you're quite a calm person. I mean, in my 20s, I worked for a high-profile blue-chip company before I started my own company. So I've always been in a high-pressure environment. So I don't really crack under pressure when things are going wrong. But that's just experience of who I am. But the lessons that I learn with trading and in life is break everything down into its smallest component. And if you're looking at prop firms, for argument's sake, and you have X amount to do in 30 days, break it down to what you need to do per day. So instead of looking at, say, I don't know, easy figures. Say you got to do sort of 10% in 1 month on 30,000. So you got to do £3,000. Break that £3,000 down into single components every day. And every day when you hit that target, you stop. And if you go over it by maybe 3 or 4% or 5% each day, be grateful, because those 3, 4% or even 10% can add up across the month. So when you inevitably have your bad day, because I have a pretty good strike rate, but I do lose, and I recognize that. But I want enough in the petrol tank to pay off that loss when it comes. And the other side of it is don't feel pressured just to pass it straight away. You have time on your side. So if you break that time into the smallest chunks, achieve it each day and stop, it'll take the pressure away from you, because you're not always feeling that you have to do it. So you could go to charts and you only need one trade, and that trade comes at 10 o'clock in the morning. you hit your trade by 11. Well, that's your day done. Do it again tomorrow. And less is more is something that I kind of stick to all the time. I love little mantras around my desk, and I've got toys everywhere because I play with them. I fidget on the charts if they're not there. I'd say timeout moments, I would call them. So if you're feeling pressured and you think you have to trade, that's the worst time to trade. Step out, go grab a cup of coffee, and then come back and look at the next hourly close. And you'll probably find you're a little bit calmer at the charts at that point than trying to force a trade that possibly isn't there. Little chunks is the best advice I can give.
It's definitely good advice. I think it makes sense for people to break it down and not put too much pressure on themselves. Like I said, they have enough time, especially with these 6 month to sometimes even like unlimited challenge that gives them a lot more time. There's still this aspect though of sometimes when they hit the drawdown, they feel the need to change things. How would you not change your strategy, change your style when you hit the tough time?
That's one of the worst things you could possibly do. All strategies work. Doesn't matter what it is. You've just got to be able to recognize the conditions first. So if you're a moving cross sort of trader, you've got to understand it's trending, because if it's in a range bound, it's going to rip you to shreds. So you've got to be able to have the ability to step back. And if you haven't, you're going to lose every time. And then the panic sets in. And what happens is, I call it treadmill of terror, because you'll have one strategy up here and it works for, as you say, just a little bit, but then it goes in drawdown. So you panic. So you change it into the next one and it does the same thing. So you change to the next one and it does the same thing. And all you do is you go around in circles like a hamster on a treadmill. And it's possibly the worst thing you can do. I personally trade two styles. I have my day trading, which is kind of market neutral. Doesn't matter what the greater trend is, because it's only focusing on the next 8 hours. It's the oscillation. And then the other one is a swing trade, which is based on the dominant move of day charts. And the thing between them are, I can recognize the conditions for each. And if you can't recognize the conditions, then you need to understand why the strategy is there in the first place. Because a lot of people will buy it off the shelf and they think, right, this is the magic pill. I'm going to be rich in a week. No, you've got to understand why that strategy works. Is it a range bound strategy? Is it a momentum strategy? Is it sort of just following the flow strategy? And then if they are, then you've got to be able to see it through multiple time frames where it fits in the grand scheme of things. And this is where sort of your panic fits in, because it's working today, but you don't know why it's working. You've just hit lucky. So you've got to look at the charts and see the conditions. And the only way you can do that is to journal and backtest. Backtest about 18 months of data, manually go through it systematically, and you'll find out what its win rate is, but what was happening on sort of the chart. So you can have what's called like +1, -1. Say you use an anchor chart of an hour. Look to see what the 4 hour is doing at the same time the hour is. Then look, see what the 15-minute is doing at the same time as the hour. And that'll give you a broad stroke of the conditions. And then see if the strategy was working. And then if they were all conflicting, then you know that strategy, when they conflict, is not right. And it just comes down to experience, study, and patience.
Now, I'm sure people are going to ask, so I might as well ask you now, but what is your trading style? Like, what kind of things do you trade? What kind of time frame do you focus on? And why that strategy per se?
I would say I'm a momentum trader, essentially. I'm a day trader for a living. Now, I break up my accounts, so I don't hold all my eggs in one basket. So I'm also quite a cautious trader. So my car, for argument's sake, has its own account. My house has its own account, and my wage has its own account, and my pension. Now, my wage is day trading, and the rest of them are swing trading, because I can't look at that many charts within a day at any one time. So I have to focus on one area. So when I'm day trading, which is predominantly what you see is sort of in my channel, the Scruffy Trader, it is momentum. That's what I'm basing it on. It's based on momentum. It's got a lot of Fibonacci involved within it, and it's based on higher time frame levels. And I'm looking for pockets of air between them, and then that momentum ignition. And to me, it works. It's common sense. I'm reading the charts all the time, so I'm looking at the top of each hour, because I look at an hourly chart first, and I look to see what the conditions are. I normally start about 9 o'clock in the morning because I don't trade any opens. I find them too vicious, and they don't normally tell you the true story of the day in the first half an hour of the open, because the market will never go one way before it goes the right way. So I like to see what happens in the open, and then the top of each hour, I make an assessment. I do a mathematical calculation across multiple time frames to get the dominant sort of decision for the next couple of hours. And then I'm patient and I wait for everything to line up. And then once it does in that hour, I'll go. But if it doesn't, I'll repeat the process at the top of the next hour. And if there's nothing there, I will wait. And this is why I come back to patience and experience all the time. I can sit from 6 in the morning marking my charts up and not get a trade done till 3 o'clock in the afternoon. But when I press the trigger, everything is in place and I've got a fair idea of what the outcome is before I go into it. I never feel kind of forced to go into a trade. And that's kind of a good inner strength, if you like, because I think too many traders come to market, they open up the laptop, I'm here, give me a trade, I want a trade, and they focus heavily on trying to find a trade. They're forcing it. That's not my style at all. I'd rather be patient, sitting like a fisherman with a fishing rod, just waiting.
A lot of people, you probably would agree, like they really want to get results. They really want to make trading work. They're willing to put any kind of work that they can put to make trading work for them, but then they don't know how, and they want to place trades to make it work for them. So they want to get there fast. What advice would you give to these people? Like, is there something they should focus on more than something else, or how can they get results when they really want results but can't seem to get any results?
Oh, most definitely. And there's one way you can do this. I never, ever put money into the equation. What I've found, and certainly speaking to guys in various forums, etc., they're always looking for the big win. They're always looking for the money. And they think, oh, I've made 1,000 quid today. Oh, I've made 500 quid today. Yeah. Do you know how you did it? No. A lot of the time they don't. It was just a lucky punt that happened to hit the crest of a wave. So the advice I would give is switch your P&L off the screen. Don't look at that at all and follow the process. So whatever it is, it's always process over money. So you need to know where your stop is. Now, to me, tight stops don't work. I'm not a believer of them. But there's a difference between a tight stop and a stupid stop. The stop has to be where the stop has to be because it's based on market structure. So you've got to understand how that works. And then once you've figured out where the investment into the trade is, because I don't like the term risk either. I think risk implies gambling. You should be investing X amount of money into the market to get X amount of money out of the market. So you're following a process. So and do it in units rather than money. So you're not sort of putting 50 quid into the market, for argument's sake, down to a stop. You can say, well, every unit is 10. So I'm putting 5 units in. So I want 10 units out. And then that way you start thinking about the chart slightly different. Because one of the worst things is if you're seeing your P&L on the screen and you're a couple hundred quid in profit, you think this is amazing. But the candle might be moving another 100 up to the level. And it's got all this way to go and there's nothing saying it's going to stop. But because you see the physical cash, you snatch it. And then you watch it rattle away up to where you thought it was going to go in the first place. So removing money from the equation is probably the best advice I can give you, and just follow your process.
And that's a very good advice. Like there's times too when you see P&L hit a high point, and then all you want is getting back to that high point. You don't want to close your trades to any less than that, and that's of course not according to the process, but according to your emotions of that number on your account size, your account balance. So definitely not useful there.
It is, and if you're talking emotions, what also happens, and this is certainly something that I've experienced it myself, and as you get older and sort of wiser, well, I'm not sure I'm wiser. I'm 52-year-old. I've still got a Batman mobile on my desk, kid. I've got more toys here than what's in Hamley's toy shop. What you need to do is, if you haven't got a calm frame of mind when you're trading, you're probably either trading way too big a size, or you don't know what you were trading in the first place. And that gives you the anxiety. And anxiety sort of breeds the fear. And as soon as you fear, you'll snatch at things. When you see it going against you, you'll just think, oh, please let it get back. And all these silly things creep into the process. But if it was all pre-planned, you would have none of that, because it's either going to go to plan or it's not, and you accept the decision. But you have to be happy with that decision before you take it. So if I've got £50 in the market, or even £5,000 in the market as investment, I am happy with that on the point of pressing the button. But if I wasn't, then it's wrong. And you've got to take that emotional content away, because if not, you'll make mistakes. And the problem with the markets is, it's not like making a mistake in a factory where they'll just tell you off a little bit, but you still get paid at the end of the month. You make a mistake in the markets, you don't get paid at the end of the month. It costs you. And that's kind of why I go back to the start and say, I look at this as a job. I'm constantly just looking to be paid. So I follow tasks, and I just don't want the market, which is my boss, to tell me off.
A lot of people are not so sure what that means, to treat trading like a business or treat it like a job. So what does that imply? What are some tasks you do that a typical normal trader wouldn't do if he doesn't take it seriously? What are some things you got to think about, focus on?
Like any job, you need to learn your craft. And all right, I get paid on par with a good professional. Okay. Did a professional rock up on the first day, read one book, watch one video channel, and then become a solicitor? Of course they didn't. They had to put the work in, they had to have the experience, and ultimately learn their craft. But once they've learned their craft and they understand it, and it becomes their job, they've got to maintain their knowledge. So I am constantly going through the charts to back up what I'm doing, because market conditions change, and if you can't understand why they're changing, so you've got to be quite wary of the news. So you've got to start becoming a bit of a researcher. So before I even go to market, I spend a couple of hours each morning having a cup of coffee, and I'll be preparing for the day. I'll read the news and I'll understand. So you've got to do a bit of research. You've got to filter through the various markets. Now, I use a spreadsheet and I look at strengths. So not only are you being a researcher, you're being an analyst as well. And I'm looking through the pairs, because I predominantly trade the majors, but I do like to trade gold. I do like to trade the DAX, and I do like to trade oil, but only if the conditions are right. So I've got to analyze all of these, filter it down. And all of this is done before we do what you would deem the job of trading, because to me that is trading. So it's just like any job. So I do this systematically at the same time every day. So I turn up at my desk 6 o'clock in the morning, and then I start. Comes up to 8 o'clock, I stop, I have a break, tea break. I don't look at the charts at all for an hour. I just calm my mind down, just like you would in a job where you're having a sort of restroom break or your lunch break. Then I go to the charts, having all of my preparation done. So if you worked in a supermarket, you'd know what the roster is. You'll know what trucks are coming in for supply. You'll know what the new arrangements are for the aisles. That's what my analysis is. It's working out all of the day plan before I go to the job. And then when I sit down, I am just looking to find the right point and being patient. But part of that patience is journaling. So if you're in a good job, you have to keep records. So I'm writing my records. If I've seen something that's gone wrong, and it does, because there's none of us perfect, we all make mistakes. And I never focus on the wins. I focus on what went wrong so that I can recognize the conditions when they come again. So that's performance review. So I'm constantly doing a performance review. And then eventually when the trade comes and I hit the money, I stop. That's me clocking out. And if you used to work on building sites, there's sort of thing called job and knock, which means you go in, you do your job, and when you've finished it, you go home. Now that can take you 2 hours, it can take you 12 hours. Well, trading to me is that as well, because as soon as I've been paid, I quit. I have a threshold where I want to get on each day. Again, comes down to breaking it down into small components. As soon as I've hit that threshold, I'm done. And that keeps my consistency up, keeps my mindset right. And then I'll make a note of it and then repeat the exact same process the next day. And to me, that's it. It's repetition, rinse and repeat, the same as you would in any job. But you've got to be of that mindset. If you just rock up and think you're going to be rich, you're probably wasting your time. Take a scratch card or put lottery numbers on, because you probably got better odds than taking your chances with the market.
That's awesome. And one thing I really love is the way you do your schedule. Like, this is really precise. And also, like, the preparation. There's a lot of preparation. You do things to do before you go in the market. Those are for sure huge. They help a lot. And I think that's something that most traders wouldn't want to do. What we tell someone who, like, they want to get into trading because they want freedom, they want to not do all these things, they want to just place trades, make money, go in, and then they're done for the day, the week, the month after. How do you switch them around to being able to be disciplined, follow schedule, and do that stuff?
Well, again, I think it comes down to your own personality trait. When I'm working, I can work mega long hours, incredibly long hours, especially because I run a group. Case in point, 2 days ago, I started at 6 in the morning and I finished at 2 in the morning because I was a bit stupid. And the reason being is I'd done my job. Then I was moderating the group and they wanted something to be done. So I went back into market to show them. Then went into the Asian session because I wanted to trade the Asian session to show them that as well. And I didn't finish till then. So that was overtime in the job. So it depends on your own personal commitment. If you want quick money, it ain't coming quick. You've got to work at it. And it's very hard to get that concept across because you either have it or you don't. And all right, if I want to take tomorrow off, I can. It's not a biggie. I can trade where I want, when I want. I'm recently in Cyprus and thought, right, wife's going down into the beauty parlor and one thing and another. I'll do a little bit of work because as long as I've got a good internet connection, off we go. So to me, I love it. So it's not really sort of a chore for me to do it while I'm away. But whereas some people, if they're not into it and they're not in tune with it, they think it's just a quick fix. It's not. You've got to kind of live. Well, for me anyway, I live and breathe this. Over the 15 odd years or whatever, I've grown to love it. So I do, but I'm also very wary it can take over my life. So I do step out, and you've got to make a conscious decision to do that as well. And again, it's personality trait. I love my wife and I love spending time with her and the kids and one thing and another. But I also love these screens that's in front of me, and I can come into my office where you're seeing me now, and I could easily lock in here for 12 hours. So I've got to consciously step away from it. It's a real hard question to answer, that one. It's person specific to your own personality. I'm quite obsessive as a person. If I'm going to do something, I will dig right into it. and it served me well in my career. You know, I did very well in a blue chip company. I started at the bottom and I came out near the top. And I started a small company and grew it into a big company. And when it collapsed, I thought, well, I'm not going to be beat. I'm going to do this, but I'm going to have to rebuild it. So that's my personality trait. But then you'll have somebody who's next to me who's not willing to put the work in. And then they go, well, it's easy for you. You make it look easy. And I'm like, yeah, but it's a 20-year journey. You're expecting to do it in 20 hours. It's a difficult one to answer.
I totally agree with you on that, and I think you had a good answer still. That's awesome. Now, I'm curious to hear what comes next. You've been funded by the 5ers, $200,000 and more and beyond. What comes next? Is it getting more capital? Do you have anything in mind? Like, where do you go after you've been funded by a prop firm?
I've kind of stayed with them. I've got to know the guys in the 5%ers quite well, and I speak to Sol regular, I speak to Toma regular, etc. I enjoy the community that they've built. Now, for me as a personal journey, I am running accounts for them, and each time you hit a milestone, that is increasing. And so for me, I'm going to stick with it. I use MT5 platforms on sort of, I have a personal broker, which is Black Bull, and the MT5 platform is exactly the same as the 5%ers platform. So for me to mirror trades from one to the other is relatively easy. So while I'm doing my own thing, I can constantly do this as well. So I'm already through the evaluations. I don't sort of need to pressure myself. I just need to take my time and just let it run. And for the small amount of investment that was put into it at the beginning, from a sort of business point of view, you know, return on investment, if you like, because that's how I think, it's phenomenal. So why quit? Just let it run. And if it's inevitably you hit your drawdown and it pops an account, well, it pops an account, but it's already being paid for because the investment has already come back tenfold. And I would just do it again. Very, very simple. But at the minute, everything is running fine and I am more than happy with it. So it's kind of, well, it bought me my car last year and it's paid for the holidays this year. So happy days.
Is there any advice you would like to leave people with? Anything I think is important for people who want to get funded by a prop firm, things they have to consider or work on before you finish off?
Yeah. If you're considering working with a prop firm, break down your personality first. So if you have time to be a day trader, then you want a prop firm that has a long length of time in order to hit your targets. But if they only have a short window, you might have the time to be able to find the correct trade to hit the profit factor. So that becomes a problem. But if you do have the time, that doesn't really matter. But then when you're looking at your funding, don't look at the account size as a whole. Look at the drawdown. The drawdown is your account. So that's what you base your position size on. And the funding side, that's your leverage. And all that's there for is to enable you to open any asset, because for argument's sake, the DAX is very expensive. So you can open the DAX, but your position size needs to be in relation to the drawdown. And a lot of new prop people, they come in, think they've got this sort of £50,000 account, and they put the position size on way too big. But then look at how many days you have to pass whatever the challenge is for your evaluation, take it to the smallest component and work from there. Bite-sized chunks. And then at the end of it, enjoy it. Because if you don't enjoy it, it'll become a nightmare. Love your craft.
So, Gary, where can people find you and connect with you or reach out after the interview? Where can they see what you do and connect with you?
I'm very easy found. Most people just call me the Scruffy Trader. But if you go on YouTube, you'll find the Scruffy Trader YouTube channel where you see me trade in the moment all the time. I also run a blog, and that's easy found as well, scruffytrader.com. And just tap it in Google. I'm all over the place, to be honest. Very, very easy found.
Awesome. I'll make sure to leave the link below the video here on YouTube. People can check it out in the podcast show note as well. They can just click that, find you there, of course. It's going to be pretty good. I encourage you to go see what you're doing, of course, out there. I know you do a lot of good work. I got a couple of good recommendations from people who follow you, so that's been awesome. And I really want to appreciate what you do, and thank you for your time. I think the advice you gave here was awesome. And hopefully we can connect soon and discuss more of what you're up to and how you've been able to progress with your funded account later on.
Oh, happy to. I mean, I'm currently testing a program for them. I'm halfway through it at the moment. I'll send you today's results. When it's finished, I'll send you it and give you a review of it if you want. So happy days.
Yeah, and I also appreciate the fact that you are really transparent about what you do. I think that's something that, like we discussed a bit before we went on the interview, that very few people do this out there. So good to see you do that, of course, and definitely good to share that stuff, of course. So I appreciate that. So thank you, Gary. I appreciate it. And we'll catch you guys back here in the next video pretty soon.